Hello, and welcome to this episode of To The Point. I'm Neil Stanley, and today we're going to talk about something I've always wanted to do. I wanted to talk to all of our clients in one session about the big picture of deposits. Now that we are at a 5.5% Fed fund world, there's a lot going on, and the dynamics are still evolving. But what we have are opportunities for you that are very significant. So today what we're going to do is go through what we would like to say to each and every one of our clients on an individual basis. But we're going to do this with this setting, and then my idea is to prompt a meeting with each of you to cover the topics that you find most important for us to cover in this environment. So today I'm going to look at how we would go through a monthly report with all of our clients when we can analyze the opportunities, the highlights and observations that we can come up with. The first thing we always like to do is understand the rate environment. And so you can always get this on your own by going to our website, thecorepoint.com, going to resources, and under resources, there's a resources section. You can go to the CME FedWatch tool. You can see the Bloomberg rates are out there. There are a lot of resources here. In addition, under analytics, you can go to key economic indicators. And in this key economic indicators section, you can find many things that could be helpful to you as you're going through your ALCO process. Most notably, we want to point out that the investment decisioning piece here from the St. Louis Fed is highly valuable to assessing the major components of the economy. This session today is not going to focus in on this. I just wanted to make sure that you knew that that was relevant in this environment. So today what we want to focus in on is we have arrived at a new level of Fed funds, not seen for many, many years, over 2 decades. And we're probably going to stay at this level for a while, which means your depositors are going to acclimate. They're going to get used to this environment. And what that means for your financial institution is that you need to know how to negotiate with them. So this Fed funds futures market says that we are likely to be at this rate environment at least through March. And then if it starts to come down, it's going to come down fairly slowly over the course of next year, not to be anywhere close to where we were before rates started going up. So we hope that you will arrange for a meeting with us to talk about your financial results. I can tell you that my goal would be to go over those financial results in terms of volume, yields, and go over pricing calibration, how your finance team has aligned the pricing for this rate environment, the user logins, the training engagement, the monthly meetings that would help to support and complement the work you're doing, and really understanding those financial results. Pricing calibration, I want to emphasize though, is absolutely essential now. You need those standard rates to be in the bottom portion of your local market. You need your promotional accounts when you time and define a CD promotion to be impactful. That means it has to be a rate that gets the results. Your companion accounts also have to be getting results. If you're trying to grow deposits, you need that companion account to compete with Synchrony, Ally, Marcus. And the refinancing programs, we're going to talk about that a little bit more, but it is in full swing right now. So if you're not taking advantage of it, you're missing an opportunity because there are millions and hundreds of millions of dollars sitting out there in the hands of depositors that could be moved over, transferred over to your institution. And then we're also going to talk about redeemable CDs today. But most importantly in this section is getting those customized CD rates right, because those are your negotiation tools. That's how you defeat the CD promotions of your competitors. And then retention offers, limited edition savings for most of you is going really well. But some of you have left limited edition savings rates at far too low of a level. Keep in mind that all the money that's in these accounts came from CDs. They're long-term savers. And if you try to keep those rates below 1 or 2 or even below 3%, it's not going to make it an effective tool for your front line at this point. So we've written about this. We've talked about this. Please engage us. If you have a rate below 3% on limited edition savings, please reach out to Christy or Julia or myself about how to manage that. And then when it comes to expanded premium options, I want to emphasize the CD refinancing is in full force today. We are now moving to a new plateau level of interest rates, and we're going to be here a while. That means that firms are starting to get serious. Deposit gatherers are getting serious about taking deposits away from each other. If you want to take deposits away from your competition, don't just do it with the maturing funds. Do it with the funds that are sitting there waiting for maturity. We've written about it. We've done YouTubes on it. And the other thing that I want to emphasize is that there are companies like AMSIV out there today that can help you with targeted campaigns so that you can send an initiative not to all of your clients, but to your competitors' clients. And you can avoid unnecessarily repricing your own portfolio. Don't avoid this just because you're worried about starting a refinancing of your own accounts. There are ways that you can work around that. The other thing we need to think about is what I would call intergenerational financial wellness. We have found that many children of senior citizens love this idea because they have found that if they go to approach their parents about managing money, it's uncomfortable. But if they go to their parents and say, your financial institution is helping people refinance accounts, you will find that they will divulge where their money is located. They'll let their children help them transfer it over to your financial institution. It's a very great opportunity to create goodwill with a broader community than just your current clients. So we certainly encourage you to think about refinancing and the intergenerational impact of that. The other thing we can do from an enhanced module at Core CD is what we call redeemable or mark-to-market CDs or enhanced withdrawal CDs. They all mean the same things. We recently wrote an article on this in BankBeat, how term deposits can reclaim their crown. Essentially, term deposits have been out of vogue for so long that most bankers really don't know how to manage them. So what we're doing today is bringing in the approaches and the value propositions that avoid the problems. A big problem with your CDs today is the penalty. People don't want penalties. The new generation of depositors don't like the idea of making a decision that commits them unnecessarily. So we've written about it, we've talked about it, and now you can see that with CDs going up in volume from about 7% of the market to 14% of the market, we have to figure out how to create a better product. The old relic CDs are only going to take you so far. We need a modern financial instrument. It looks like a mutual fund based upon fixed income securities. You can offer that in your market. Give us a call and let us go through that with you. Now, the other things that are outside of the core point, we're talking with people about the split rate checking or non-maturing accounts, not split rate checking, but split rate non-maturing accounts. We call them balance builder that allow you to pay more on the growth in the account. Novata, Zafin all have offerings that help facilitate this. We know that there are rewards checking and split rate checking out there. There are modules out there, but you can also work with Kasasa to get this product. Premium DDA services like Bazing allow you to offer additional value that's worthy of fees on your checking accounts. Overdraft protection, overdraft activity. Of course, we know that's been highlighted in terms of a regulatory pushback, but there are many things that you can be doing. We're happy to talk with you about how to navigate the NSF OD world. The other thing that's happening, interest rates on DDA. Back in the day, when interest rates were at these levels, there was a prohibition on commercial customers being paid interest on their DDA accounts. That's gone. So now lenders are approaching depositors and saying, or approaching their commercial clients and talking about interest rates in the 7s and 8% ranges. It's legitimate for those commercial customers to ask, are they going to get paid interest on their DDA? Does it make sense in this environment to give your lenders the authority to give some interest rate on DDAs that may be 500, 600 basis points below their loan rate? This is a topic that you should be actively discussing. The other actively discussion topic that's going on right now is, what do you do when you see funds flowing out of the bank, even if it's a small amount? And most importantly, if it's a small amount. Normally, when someone uses a non-local market channel like Synchrony, for example, they open up a small balance transfer. They open up their account and then they send a little bit of funds over there. Then they grow that. Well, what if you used that first transfer as a flag to consider that maybe that depositor is no longer a sleeper? What if you proactively went to them and offered them a personalized offer that gave them specific terms of an account that you could set up based upon the specifics of their relationship with you? We think this is an opportunity for you at this time. So I hope that these things all made sense to you. We have a number of partners that we can also work with. You can see the logos here. This comes from a wide, diverse group of alliances, from recruiters like WorldBridge to trainers like Level Up, to strategic planning consultants like Cross Financial. Our Haberfeld relationship is long-standing. We've started working with Taylor Advisors on balance sheet management, an FI Market Scan with check printing and debit card negotiations. These are all critical things as we move into a new season in our banking industry. Yes, it might be in some ways harder, but it's probably going to be more like what we're experiencing now than any time in the past for a long period of time. We're likely to see this environment extend where we're going to be finding more intense competition for loans, more intense competition for deposits, and we are all going to have sharp pencils and good processes in order to negotiate. I hope you have found working with the CorePoint to be valuable to your organization, to you individually. We hope that if you do find that you would be willing to introduce us to your peers that you don't compete with. What peer groups do you participate in? Would you be willing to introduce us either in a one-on-one situation or in a peer group meeting to suggest that maybe we come and speak to that group? We hope that this is valuable to you. We know that you are busy people and we don't want to take your time unnecessarily, but we think that these are all things that we can be doing for you. We hope that you will take the opportunity to set up a meeting on my calendar. You can do that with my appointment app here at calendly.com/Neil-the-CorePoint. I hope you have found this episode, which I've had fun delivering to you, to be valuable and insightful. We look forward to producing these episodes. And until the next one, make it a great day. Thank you.